We are a disciplined developer of oxide gold in the US. Oxide gold is material near surface that can be processed by simple open pit heap leaching, in our case, run of mine. That means no crushing. And leaching means no mills, no large process facility, and more importantly, no tailings facility. So it's a very simple, low footprint method, low cost method of extracting gold, very well known in the US. I had the privilege of presenting here a year ago, and gold at that time was $2,050. We were a company that had a pre-feasibility study on Black Pine, our flagship asset. We thought we had a tiger by the tail. The market hadn't figured it out. We were at 30-cent stock. Today, gold is at $52.50. And there's a 5x on our share price. And we have a clear, disciplined way forward to produce metal in under 3 years. I've already made a bunch of forward-looking statements, so I hope you'll read this retroactively. Pretty much everything I say today seems to be a forward-looking statement, so here we go. Company highlights. These are the results of the pre-feasibility study that we published in October. And we felt that was October 24. We felt that was good enough at a $500 million NPV at a $2,000 gold price. We felt that was good enough to start a feasibility study. We like the US. This asset is in southern Idaho. It is a great jurisdiction. The Great Basin geology is something that the company really understands well. And this deposit is on the shelf of the Great Basin, which is an area that hasn't really received a lot of attention because all of the big mines are sitting right in the core of the basin. So we felt that this was a really interesting asset. We picked it up in 2016 for about $800,000. A previously producing site with a very large land package. This is the capital structure of the company. We welcomed Centerra Gold into our share register last year after some extensive due diligence. They're in there at 9.7. We've got long-term sticky money in the company. Van Eck, Franklin, Merckx, Amati, RCF. Wheaton hold the only royalty on Black Pine, which is 0.5%. And we have a 50% buyback right on that. So that puts us in a unique position for a US gold player. We're well funded. We have a strong balance sheet, 32 million US in treasury at the last reporting, which was the end of Q3. With those funds and with funds coming in from warrant exercise due in May this year and in April next year, we are fully funded to get to a final investment decision to build Black Pine. That's a very strong position for a company like ours. Great analyst coverage, and we're pleased to have those guys looking at our stock. This is where Black Pine is, right on the Idaho border to Utah. We are 2 hours north of Salt Lake, right on the old shoreline of the Great Salt Lake. So this is an arid, dry environment. No surface waters, no streams, no lakes, no seeps, no springs, no aquatic species. And that's a huge positive when you're in US permitting. No jurisdictional waters. The area has been repeatedly burned over multiple decades, so we don't have threatened and endangered species. We don't have large timber values. And all of our mining is above the water table, so we don't have any pit lakes, pit lake evaporation, and pit lake chemistry. A very favorable site, as I mentioned, previously producing, so the view shed is already disturbed, and we are reopening an old mine, which puts us in a very strong position when we're negotiating permitting. These are the results of the preliminary feasibility study, same as I showed earlier. Key highlights here, $300 million to get into this thing, a very modest capital to get you to 183,000 ounce a year producer for the first 5 years. This price base is June 24. We're right now in the middle of a feasibility study, which is due out in October this year. And we're going to see an improvement in gold production. We're going to see an improvement in our production rate annually. You're going to see inevitably an increase in costs. Last 2 years of inflation, we're starting to see, with lots of money floating in the industry, some pressure on construction labor and construction materials. So inevitably, we're going to see an increase in capital costs. And labor, operating labor, definitely is increasing in the US. So we anticipate some move on our ASIC costs as well. You could see a really nice project, $500 million at $2,000 gold. Our NPV is in excess of $4 billion at spot prices today. So that's an interesting project. Very simple, as I mentioned. There's the I-84. That's a highway, 2 hours south to Salt Lake, an hour north of Burley. We're right on the road. Everything is there from the previously producing site. So we have water wells that are drilled and pumping right now. We have a power line to site. We have a single leach facility on a very, very structurally favorable site, shallow dipping, flat site. Base of that, the process facility, that's a simple ADR plant. What does that mean? It means pumps, pipes, and tanks, carbon columns, and then a process to pour doré on site. Site services means a truck shop, a wash bay, and a fuel bay. And that's about it. Oh, I forgot the front gate. Simple mine, simple mine. We came out with our updated mineral resource about a week and a half ago, which took us to a hair under 5 million ounces at indicated, which is a nice number to be putting into a feasibility study. There's also another 1 million ounces is inferred. That sits in waste as a reserve, but obviously we will be drilling that out over time. It's all underpinned by just under 2 million ounces at a gram. That's the high-grade core of this thing, which is driving the economics. So where we came from 4 million ounces just over for the PFS, which drove the numbers I showed you, just under 5 for fees. So we're anticipating that we will actually, remarkably in the industry, produce a feasibility study that is in many respects better than the pre-feasibility study. That is not common amongst my peers. The reserve will grow. We're not sure where it's going to go yet. We're right in the middle of mine planning. But given our at least 700 increase in indicated, we're confident that we're better to grow the reserve and grow life. Company's been disciplined in drilling out this resource. You can see progressive incremental growth in the resource since 2021. This thing is large. I'll point you to a beautiful analog, the Marigold mine, owned by SSR Mining. That started in 1989 with a 9-year mine life, has produced every year since, over 30 years, and still has a 9-year mine life. This is that style of deposit. Incremental growth, incremental drilling will show incremental growth. And here's where it's going to come from. The areas in blue are our target growth areas. You can see surrounding the high colors, that's where we have mineralization right now. And we see great upside opportunity at this asset for resource growth and ultimately long mine life. Permitting in parallel with our engineering track, which is the top bar. You can see we're targeting a feasibility study in October. That then goes straight into detail engineering. And we anticipate having detail engineering entirely complete before we start construction. That is a hugely de-risked project. Not only is it a simple project, but we'll have all the engineering done. So we will be able to go in and very likely self-perform this project. Construction's in 28 and first gold December 28. We have a parallel permitting stream. Our notice of intent, which is the document in the US that triggers NEPA and triggers the EIS. That's in Washington right now under signature. And we are targeting our final EIS at the end of 27. That puts the point where we get a draft record of decision in parallel with finishing detail engineering. Final record Q1 28, construction begins. Importantly, we applied for the FAST-41 process, and those of you who may have heard of that, that is a permit accelerator in the US. We got accepted in January. We're in the process now of schedule renegotiation, and we will issue an update to this schedule at the end of March. Once that is complete, that is a definitive, locked-in US federal permitting process, which is critical path to construction. And at that point, we believe we have entirely de-risked as much as is possible the federal permitting process, which de-risks the project and really puts us, from an execution point of view, in a very strong position. So, in summary, 26 is going to be a very important year for this company. We're going to finalize our permitting and thus construction and production schedule. We're going to publish our feasibility study in October this year, and we're going to move into detail engineering while we are completing all of the environmental impact documents and public engagement. An exciting time for Liberty, and I think you're going to see us going from our 0.2 P/NAV ratio. That's going to be recognized as significantly undervalued, and I think we're a tremendous investment opportunity. Thank you very much.